Hello and welcome back to Explain the Charts. Today we're going to be giving you an in-depth analysis of USDCAD, looking at not only the current market events and news, but also looking at various charts to make sense of this pair's movement. Recent news and analysis from various sources suggest a mixed outlook for USDCAD. Some sources point to potential upward momentum, citing economic factors like increased manufacturing activity bolstering the Canadian dollar, while others highlight the pair's recent rally and possible retracement. The news surrounding potential tariffs on Canadian goods has also played a role in influencing the market dynamics. Let's start by examining the daily chart of USDCAD. We observe a period of consolidation, ranging roughly between 1.3940 and 1.41. Notice the recent price action after the news on new tariffs, causing a spike towards 1.4178 before retracing back into the mentioned range. Now let's take a closer look at the hourly chart to see intraday patterns. Here, we can see some clear short-term support and resistance levels. For example, a break above the 1.40 resistance could signal further upward movement, whereas a drop below 1.395 might suggest a short-term bearish reversal. This hourly chart helps us fine-tune our entry and exit points within the larger daily range. Zooming in further with the 15-minute chart, we see smaller fluctuations and the potential for quick scalping opportunities. If the price moves rapidly, it would make sense to take advantage of these opportunities by considering the smaller price differences and their quick movements, as opposed to the slower, larger fluctuations of the daily chart. There is high volatility on this time frame, which correlates directly with the increased volume which can be seen. The 15-minute chart gives us some important price levels to watch closely. For example, a break above 1.402 could initiate a short-term buy, whereas a drop below 1.398 might trigger a sell. But these should only be considered short-term trades based on this data. A successful strategy here is to look at this chart and use it to pinpoint your entry and exit points on the other charts. In summary, based on this chart data, the 1.3940 to 1.41 range on the daily chart appears to be a key area of consolidation. This is supported by the hourly chart's short-term support and resistance levels, as well as the 15-minute chart's smaller fluctuations. For long-term trades, consider going long above the 1.41 resistance, especially if news supports the upward trend. However, breaking below the 1.3940 support on the daily chart would be a strong bearish signal, which should be used to consider selling, but only after it happens. Remember, this is just an analysis based on the data available, and the market can be unpredictable. As such, be sure to use this as one of many tools when considering which trades to make. Always manage your risk appropriately and stay informed about current events.